This is the Friday, August 14, 2020 version of the Market Plus. Joining us now, Mark Gold, Ted Seifried. Gentlemen, great discussion during the show. I got so wrapped up I didn't get a chance to do all of the questions. Ted, you got something on cotton?
Yeah, it was kind of a wild week in cotton. And it's all centering around, Chinese buying and not buying again. And the fact that they are, talks are going well, China is buying, that's been a good thing for the most part for cotton. There on Friday, just a slightly lower close, but we've been in this upward trending channel for quite some time. It does look like we're getting a little bit toppy here. I am worried that there is downside potential. I think producers should be, to quote Mark Gold, buying puts here. But again, it's kind of like the conversation we were having in cattle. It's been an established uptrend. It's just been kind of chugging its way higher. I don't have anything on a chart that says it's falling off a cliff right now, but fundamentally, I'm worried that there is downside from here. And so I would be taking some limited protection to the downside.
All right, Mark, we got a question from Andrew in Minnesota. He was asking, are we just rallying back to the top of this 310, 350-ish range, or do you think we got potential to head to $4?
I think we've got the potential to head to 380 to 390, certainly. I like the way the market acted this week. If we can close just a little bit higher over 340 in the December contract, I think that would be very helpful. The Chinese want some grain. I think they're going to buy it. Whether they do it pre-election or post-election, I don't think it matters. But I think ultimately we do have a fair amount of upside in the corn. I think we've really done some damage with the derecho that went through. And I see demand picking up on several different levels. So I'm hopeful that the corn market can rally.
Okay. Ted, this is a question that you wanted to answer, so I'll ask Mark first. No, just kidding. Chad in Washington, Kansas. And this was something we talked about. In fact, I think, Mark, we actually did talk about this a couple weeks ago. Rail freight is hard to come by, but China demand is looking promising. Is it time to lock in basis contracts on corn and soybeans, but leave the futures open?
Okay. That is a great question. And it really, a lot of that boils down to where you are and what your point of access is as far as who you're selling your grain to. However, I think in a great scheme, by and large, I think the commercials are starting to get nervous about all of the soybeans and to some extent corn that we are selling to China at the prices, I'm saying low prices below $9. They're worried they don't have it. So you've seen basis really come up in a lot of areas. One of my guys in Northeast Iowa, he's 3 cents over on soybeans right now when normally he'd be 25, 30 cents under. So to me, that says basis could continue to get stronger. That might be the indication that futures could go sharply higher too. Then you would worry about that basis. But if you have a really good basis, seasonally good basis around you right now, then yeah, I think it's a great idea to lock some basis and then look for the futures to rally.
Mark, do you have anything to add on that one?
Well, I agree with that. I like the way the basis has been acting. I think these markets are going higher. I think there's all kinds of problems out of Brazil. They don't have the beans. What beans they're shipping, there's a very big concern about COVID. A lot of these beans are winding up in Filipino ports rather than Chinese ports. So that tells me that more can happen, not only on the basis, but on the flat price as well.
All right, Mark, we have a question. Wanted to get this one in the show. I just kind of ran out of time. You guys got going on grains so much there. Glenn in Bryan, Ohio. This one is considering the lack of significant response to all the recent fundamental news in the market. He's asking, do black swans matter anymore? I added the anymore part.
Sure they do, depending on, what it is. If China comes through and says, we're off the table, that's a black swan nobody's expecting. That'll move the markets. If we come out with, who knows, some rumor that soybeans are really healthy for you and the market goes higher, that's an unknown. The market will react to that. But some of this day-to-day news, it's got to be significant if it's really going to play an important part in really changing the supply or demand figures out there.
Okay. Ted, you're about to head out in the morning and you're going to make your way across corn country, soybean country, and take a thing. So I guess the question is, before Dana in Osceola, Nebraska is asking, is the 2020 crop done getting any larger? Before you go, do you think that what do you think the answer is to that question?
Well, Paul, that's what we're going out to see, right? And ask me again next Friday. I'll have a much better answer for you. But that being said, what are my expectations? What do I think I'm going to see out on crop tour this week? And that's a great question. I think we're going to see a pretty darn good crop. I'm expecting that this is going to be a really good crop based on the NASS ratings. It's a very well rated crop right now. Now, the question is what happened as far as damage is concerned. That's what everybody wants to know. And we're all just starting to figure that out. But for the most part, I do think that we're going to go out, see a good crop, but maybe a crop that's not quite as good as what the satellites have been seeing, the 188s and things like that. I think we're going to see something that's at or close to trend line or at or close to a record yield for both corn and soybeans. But I don't think we're getting any bigger. If anything, I think we're coming back down a bit. Certainly, the severe weather had a part to do that. But I think even without that, we were starting to come back down a little bit. And again, when I look at the forecast through the end of August, and specifically I'm looking at soybeans here, I just don't see a 54 national average yield. I don't see that perfect weather out there to really fill out pods, ideally. So, I think it's going to be a little bit less than what we've seen. I'm going to agree with what Mark said on the show. We were both saying on the show, it's probably hit the high water mark as far as production is concerned at this point.
All right, so Mark, last question to you here. Last question of our discussion is going to be from Matt in Amherst, Wisconsin. What grain commodity do you think is the best bet for 2021?
Well, I've been a soybean trader all my life, so just out of habit, I'll say soybeans. But I look at what's happening in Brazil, China, and it tells me that the Brazilians are out of beans. China's got to come to the U.S., assuming that there's no black swan problem with the Chinese not living up to their agreements. They are going to continue to buy an awful lot of soybeans out here. And I believe that we can see significantly higher prices. We've been selling cheap beans for a long time. The Chinese have done a good job about buying these beans. And now, if we're seeing a real movement here, look at the export figures we've seen in these bean markets. I think the beans have the best potential. We've got the most rational carry out really out there, even if it's 610. If we knock significant numbers off that because of the derecho, now we got a market. And if, God forbid, Brazil has a problem next year, who knows where we're.
All right. Tad, I'll ask you the same question. What do you see as the best bet in 21?
Yeah, look, China bought 9% of our grain sorghum in 1 week. No, but listen, I'm going to agree with Mark. It was the same scenario last year. Last year, the soybeans had all the potential in the world. Now, we had Black Swan event after Black Swan event that really, put an end to that. I don't think we're going to have the same thing this year. We didn't plant enough acres of soybeans, and we do have a trade deal with China. China is buying every day, right? And they're big chunks. Our export sales for soybeans last week were 3.5 million metric tons. Oh boy, that's really fantastic. And as long as China's buying, the market kind of has a job to do. And that job is to go and find out what price they stop buying at. Because if their demand is still going to be there if we rally 20 cents, we got to find out if it's there if we rally 40 cents. And then when we find the price that they stop buying, then we'll come back down and try to entice that buy and come back out again. Which is why I think really we should see a pretty significant move in soybeans here in the relatively near future until we shut that buying down. We've gotten the production question, for the most part, out of the way. We've already printed almost a 54 national average yield from the USDA. I don't see that going higher. So that fear of a big, scary balance sheet is, I think, behind us now. Now the market's job is to go find the price that China stops buying as aggressively as they have been.
All right, Ted Seifried, thank you so very much for your time. Mark Gold, thank you as well. Gentlemen, good to see you both. And we'll talk to you again soon.
Thanks, Paul.
All right,
thanks, Paul. Have a great day.
Hey, you too. Next week on the program, we'll look at how one company is helping landowners restore a bit of the prairie, and Naomi Bloom will join us to analyze the markets. I'm Paul Yeager. Thank you so very much for watching, listening, or reading. Have a great week.